In a Fox Business exclusive, I am pleased to say we have the VanEck CEO, VanEck. Thank you so much for being here on the eve of the Christmas Eve. We so appreciate it. There has been so much talk about the AI bubble. We're in it, it's over, it hasn't popped yet, but it is the fourth industrial revolution, but debt levels, where do you come down on this debate?
I think AI is a mega trend, but the bubble already popped. Just as we were all talking about the big bubble over the last 2 months, it's popped. Why do I say that? Look at some of the compute platforms. Oracle, which was building out its compute, down 39% from the peak. CoreWeave, down 50%. The market just does not give companies a break. If they're worried about financing, like they were talking about OpenAI, Citi was in that research report, they'll discipline them right away. However, now I think it's a great entry point.
Really? Okay, so I want to talk about that because a lot of people would come to me, the naysayers, and they would say, okay, yes, but Oracle is a one-off. CoreWeave, certainly just a one-off, right? That's, related to data center leases and sort of an idiosyncratic risk. But that's not in capturing the entire of the AI bubble. What do you say to those people?
Well, what Citi focused on is what I would agree. The big weakness is the OpenAI ecosystem. Because Sam Altman wants to build $1 trillion worth of compute, and he's only got $10 billion worth of revenue or something like that. However, that's what I'm saying. The market just disciplined all the companies that are leveraged into OpenAI. They're now at attractive prices, and even over the last week, you've seen Google come in and finance some of the Bitcoin miners that are building out compute. So Google's basically saying, listen, we need the electricity for the data centers. We've got your back. We've got a balance sheet. And so I think that puts a floor in this correction. And so I think you have attractive prices like NVIDIA, which is now back to sort of 20-ish forward earnings, which is just not too much to pay, I think, for such a growth company.
Where else is attractive right now if I'm looking to get in on this?
Well, I'd say semiconductors, because NVIDIA, there's been a lot of fear there. If you really have a high-risk appetite, it's these Bitcoin miners that are getting into the compute space. So like a Hut, a TeraWulf, a Cipher Mining are holdings in our active ETF, ticker symbol node. So that's an industry-specific ETF. So we're able to take a little bit more risk, but that's not for everybody.
Well, so you're bringing up this interesting idea of how we think about risk. And you and I were talking about active versus passive. And someone once told me, if you have to go passive, do that in like the S&P 500. Markets are super efficient. If you need to go active, you go somewhere where there are inefficiency in which to exploit. How do you think that about in the AI world, the gold world, the crypto world, all of these different worlds where you find ways where it is beneficial to be active?
Yeah, I mean, our active research focuses on the resources space, as we mentioned, and then emerging markets. And crypto would be the last area. But I would think what the market is missing, right? That's the definition of being active. And I think what the market misses sometimes, in VanEck's view, are some of these big macro trends, like AI, like gold. So yes, it's stock picking at one level, and we excel by having industry experts in those industries. But I think sometimes it's also the macro story, like gold's up a lot. We don't want to chase it. And I think they're not understanding the fundamental changes happening.
Oh, so talk to me about gold, because people will come to me and I'll say, oh my gosh, at 4,500 an ounce rate, it's hard to get invested now. Other people say, but momentum, gains lead to more gains if you're looking at pure momentum trades. How do you think about gold? Because we're looking at silver, copper, everything's at a record. Everything's
booming, right? The metals are booming. I think gold is just in a decade-long trend, and I think it only started 2 years ago. So you have two big drivers. One in the U.S. is the Fed. The Fed stopped raising rates 2 years ago in 2023 and said, I don't know when they're cutting, but they're not raising anymore. So more liquidity is good for gold from a U.S. perspective. But the other thing that's happening is there is no winning currency in the world these days aside from gold. So if you look at the Chinese economy, the Indian economy, some of the biggest economies in the world, they're not dollar-centric economies. And so what's the next best thing for the foreign central banks to buy? It's gold. So I still think we're early days. And even though this year's rally looked insane, it only corrected like 12 or 13%. So listen, nothing goes up in a straight line, but I think we're in the middle of a 10-year bull market here.
It's interesting that you say that. People also comment about sort of the AI trade, that this is the fourth industrial revolution. And so you mentioned, for example, NVIDIA, trading at only 20 times. For our audience out there, super smart, but a PE ratio is just one way of how I value a company, right? I'm looking at the price relative to future earnings growth, and it's giving me the value of that company.
Right.
That sounds average, 20. That's good, right? The average for the S&P is what, exactly. 18 to 20-ish.
Right.
But if this is the fourth industrial revolution and this is changing the world, then I have appetite. If it was overvalued, I would get in it because it's a structural shift in the market. Is that what side you come down on?
Yeah, I mean, look, as I say, look outside the financial markets. Look at the demand for, I use this word token, which is basically like words in AI speak, okay? The demand is up 39 times over the last 12 months. And since the last 6 months, Google is saying that their demand is up 8 times. So it's hard to really explain. Even the CEOs say this is such an explosion in demand, we can't even estimate it ourselves. So what I'm saying, what the market's missing is next year, 2026, the following year, 27, NVIDIA is going to be sold out. They have their earnings are probably on the low end, what the market is expecting. Okay. So if you worry about a bubble, worry about 3 or 4 years from now, not a stock that's growing at high rates at reasonable prices.
You'll know this better than I do. I think Greenspan was talking about irrational exuberance in 1996, but the bubble didn't really pop until 99, 2000. So you're right. You could feel like it's bubble territory, but it actually still may have, 3 to 4 years of room to run before you even sort of get to that deadline.
And that's why I love that Oracle fell almost 40%, yeah. That CoreWeave fell 50%, because our thesis is that the overall market is in a great shape because the big constituents, even though they're at a historical high percent of the S&P as a total, they're unbelievable companies. They have economies of scale, and they're growing revenue and keeping costs flat, if not cutting costs. So they deserve their valuation. This market makes sense at a big level. But if you look at some of the churning underneath the water, that makes sense too, and there is discipline. And so the market was worried about OpenAI. That got priced in 6 weeks. Yeah. Now it's priced in. Enjoy the holidays.
Okay, we'll love it. We're going to leave it on that note. Jan VanEck, thank you so much for your time.
Sure, thanks, Taylor.
All right, the world's biggest drone maker suddenly banned from